Stock market investing guru Peter Schiff publicly went on Twitter today and slammed Bitcoin, labeling it as fool's gold. Let's talk about that. How's it going, guys? Ryan here and welcome back to another investing video, and today we're talking about something that is hot off the press, and that is Peter Schiff going on a Twitter tirade effectively calling Bitcoin the modern day fool's gold, saying if you want to hedge your money, put it in physical gold instead. But before we get into that, guys, please remember to like this video. It helps me out so much with the YouTube algorithm, and subscribe for more of this kind of content if you do enjoy it. And then after you've watched the video, I'd love to know your thoughts on Peter Schiff's comments. Please leave them down below in the comment section. So let's get straight into the video. As I'm sure all of you are already aware, Bitcoin recently surged over 40,000 US dollars, which has caused quite a stir within the investing community in general as to whether Bitcoin is a legitimate form of currency, and cryptocurrencies in general, whether they will be legitimate forms of currency. Shortly after that period, Bitcoin dropped severely, pulling back roughly 28% in a very short period of time. And this has led to quite a lot of negative comments with regards to the stability of Bitcoin, purely due to the absolute volatility with the currency. One of the individuals who have been quite vocal about Bitcoin's legitimacy is Peter Schiff. Effectively, he is an American stockbroker, roughly worth $70 million, and he's currently the CEO of Euro Pacific. He's also quite a prominent financial commentator. So his opinions are actually built on a lot of legitimacy, so they're worth listening to. But what he's actually gone and done is launched a tirade on Bitcoin, effectively comparing it to fool's gold and saying that anyone who investing in Bitcoin is effectively a fool. And instead, he has recommended that everyone invests in gold if they genuinely want to hedge their money. In Peter's first tweet, he commented, "Bitcoin traded near $42,000 on Friday and near $30,000 on Monday. An asset that drops 28% over a weekend is not a safe haven, a store of value, or a viable hedge against inflation. If you want to gamble on Bitcoin, buy Bitcoin. But if you want to hedge against inflation, buy gold." Effectively, what Peter's saying here is the volatility of Bitcoin means it is not a safe haven for investors. So effectively, if you want to put your money in a safe space, you don't want to put it in something as volatile as Bitcoin. And whilst this is something that I tend to agree with, for instance, if I put my money into a stock and it was quite volatile, so micro caps or penny stocks for instance, they are definitely not a viable hedge. But for something with a cryptocurrency where it has a limited amount of coins that can be mined, and it is a viable product that has a limited resource, similar to gold, that means it could be considered a viable hedge. In theory, if we look every single time there has been a halvening, what we see is an increase in the value of Bitcoin. And effectively what we see over roughly every 3 to 4 years is quite a significant increase in Bitcoin. And typically over the last decade, it has been one of the best investments you could have ever made. But does that make it a good hedge? Well, I don't know. Let's move on to his second tweet. In his second tweet, he stated, "I'll be on Fox Business today at 2:30 Eastern Standard Time with CB Payne to debate Bitcoin versus gold. It's really not a debate as the two have nothing in common. The problem is people are buying Bitcoin thinking they're buying digital gold. They're just buying the latest iteration of fool's gold." Peter in this second tweet has effectively labeled Bitcoin as being fool's gold and saying there is absolutely no comparison that you can draw between physical gold and Bitcoin as a form of gold. Yes, it can be used as a digital currency, but it doesn't have the same hedging ability that physical gold does. And that's the point Peter is trying to draw here. But it is quite a controversial point because you do see a lot of prominent figures actually investing their money in this cryptocurrency called Bitcoin purely due to the fact that they believe it is going to be a safe haven and consistently grow over time, and it could be one of the next major players when it comes to transactions globally. In his third and final tweet, Peter stated very few institutional investors are buying Bitcoin. It is just that those few that are buying are extremely vocal about their positions. They need to convince others to buy to push up the price so they can sell. The financial media also gives them a platform to talk their books. Now this third tweet is actually quite juicy and there are a few elements in it that I'd like to break down. The first one is the fact that Peter talks about institutional investors, and effectively these are the big companies who typically invest large, also known as smart money, into stocks or currencies. Now, if institutional investors aren't getting into something, typically that means it's not necessarily something that's mainstream, or it's not something that is actually a good place to put your money into. Typically what you'll see is something that is new and emerging will not attract any institutional investors purely due to the risk. So it may be viewed by these institutions that Bitcoin at this point in time is too much of a risky bet for them to get involved with. The second point of this tweet that Peter is alluding to is the fact that those that are in Bitcoin are very vocal about Bitcoin and are effectively trying to push the price up so that they can sell for a profit. This is typically known in the investing industry as a pump and dump because the price is being pumped up and then people are dumping their cryptos, or whether it be stocks or currencies, whatever it is, and dumping it, selling it on the market, causing the price to drop severely. And effectively what these people do is they go in and out really quickly for a profit, but at the detriment of others. And what they'll do is they'll actively be vocal on social media or forums or in the public media to try and drive the price up for their best interest so that they can sell. And effectively what Peter's saying here is that the people who are vocal and are investing in Bitcoin, who are significant figures, are trying to do exactly that. The final point is that he claims that these individuals are also using Bitcoin as a platform and using the media as a platform in order to sell their books, sell their products, sell their training, all these sorts of things for their own personal gains. Effectively saying they know Bitcoin is a sham for a hedge sense, but they want to promote their own products. And the media is effectively giving these individuals a platform in order to sell their products. Now, I'm sure you can appreciate the comments that Peter has made here are quite controversial, and in the comment section of these tweets he got quite a lot of backlash purely due to the fact that he was slamming Bitcoin, saying it was effectively illegitimate and it was fool's gold, basically calling everyone who's invested in Bitcoin, especially if they're hedging their money there, a fool. And effectively this has rolled up a lot of people. My opinion personally is that Bitcoin is legitimate, and I believe it could be a legitimate hedge purely due to the fact that there is a limited amount, it's decentralized, and is currently being used as a global currency as we speak. There is definitely some backing to it. I personally hold a small amount of Bitcoin, not too much. I don't even own a whole Bitcoin, and I own a dabble of other cryptocurrencies as well because I genuinely do see the potential there. Will it be a hedge in the long term, especially when you compare it to something such as gold? I don't know. I feel like you would be safer putting your money in gold if you were hedging, but that doesn't mean Bitcoin couldn't be a hedge at all. But you need to take into consideration the volatility of Bitcoin and cryptocurrencies in general as opposed to gold. And that wraps up today's video, guys. I'd love to know your thoughts down below in the comments section on what Peter has said, and even on my own comments as well. If you did enjoy the video, please remember to give it a like. It helps me out so much, and subscribe for more of this style of investing content. And with that, guys, I hope you have an awesome day. I'll see you next time. Cheers.